Hey everybody, this is Greg Gossett from Gossett Trading and Mentoring Live, and today is Friday the 13th, 2019, September 13th, 2019, and we again find ourselves in the final hour of the market. Excuse me. So thank you all for coming today. I appreciate it. I really appreciate you spending your time here, investing your time here with me, and I hope it's helping you with your trading. I hope it's giving you some kind of return on the time that you're investing with me. So I really do appreciate it. And so let's see what's happening today. So currently, Dow Jones is up 45 points, NASDAQ is down 15 points, and the S&P is down about 2.7. So not too much going on today after the last couple days of big ups and kind of some volatility. So far it's been pretty tame, but of course we never know what's going to happen in the last hour of the market. I prefer to make all of my buying and selling decisions during the last hour of the market, and specifically as close to the close as I can get them. I feel like the prices near the close are the most valid prices of the day. That's when the market makers and the large financial institutions take over the price action from the algorithms and the day traders. And so those are the prices I think are most valid, just in my opinion, but those are the prices I like to make my buying and selling decisions from. So let's see. Hey, Steve Burns. Good to see you, Steve. Thank you so much for coming. Thank you so much for including me on your list on Twitter today. I really appreciate that. It's an honor to have you here as always. Steve says, finally a dull day in the market. Yes, it is pretty dull. It seems like we went from about 85 down to about 25, and it seems very slow, but that's okay. Slow days are good too, right? We've all I think had a pretty good last week, and so I'm grateful for that. So the plan for today, as per usual, is first of all, we're going to run the U.S. legal disclaimer. We're going to get that out of the way. We're going to come back. We're going to take a look at my current positions. We're going to talk about when I bought them, why I bought them, and how I'm going to manage them going forward. After that, we're going to spend a few minutes on some trader psychology. I mention this each day, but what I'd really like you to do is I'd like you to think about developing your skills with your emotion. You know, we always think about developing your trading skills, but emotion's a huge part of that. I think it's probably 90, rough number, probably 90% of that, because your emotions are going to dictate how you trade. So logically speaking, you have to have a skill in managing your emotions. So I hope that makes sense, but it's very, very important. I harp about it every day. You guys are probably tired of me talking about it, but listen, I'm here to help you trade better, and if the psychological component is a 90% of that, then I think we need to talk about that. So anyway, that's what we're going to do. We're going to talk a little bit about psychology. After that, we're going to come back. We're going to take a look at all my current positions. We're going to talk about when I bought them. Talked about that already, but yeah, talk about when I bought them, why I bought them, how I'm going to manage them moving forward. Then we're going to do the psychology. Then we're going to go through my watch list, and we're going to take a look at each particular stock. We're going to look at all the support and resistance levels, look at all the indicators like moving averages, MACD, RSI, support, resistance, and we're going to see whether or not there's anything today that we might be interested in taking. The way that I look at technical analysis is each indicator that I look at, whether it's a moving average or an RSI or a previous top or a previous bottom, those are indicators, those are support and resistance levels, but I look at those as groups of buyers and sellers. And it's very important, if you want to buy a stock, if you want it to go up, you want to be in the company of other buyers. So each indicator that I look at as groups of buyers. So therefore, the best, place to put yourself position-wise, if you want a stock to go up, is if you have a confluence, if you have a combination of indicators lining up, and therefore a combination of different groups of buyers, more buyers. So, you know, if there were a lot of indicators lining up to the sell side, that's probably not where you'd want to buy, because you have multiple groups of sellers coming in. So that's what I always look for. That's kind of the mechanics of my trading. That's, you know, what I really look at first. You know, is there a confluence of indicators lining up, or groups of buyers lining up? So, and then, so we'll go through the watch list. We'll see if there's something interesting. We'll whittle it down to a handful, and then at the end of the day, I'll go through it with a little more fine-tooth comb, and see whether or not I want to take the position. And if there's nothing there, then there's nothing there. And you know, that's a skill in trading too, is doing nothing when there is nothing to do. I know we always feel like we want to be doing something, like we want to like take some action to make something happen, but in trading, in my 24 years of experience, you can't make it happen. You have to let it come to you, right? You have to let the trade come to you, and if there's no trade there, just don't take it, right? So, and then after the market closes, if anybody has any questions whatsoever, please let me know. I'm happy to answer them for you. Even if it's something that I didn't discuss today, if you have, you know, some other type of question about trading, I'll do my best to give you an answer, and maybe and hopefully help you out. And if you want me to take a look at any stock symbols, I'm happy to do that as well. Hey, Gamer Squad, good to see you, sir. Gamer Squad says, hi, happy to be here. Oh, we're glad to have you here too. William, hey, how you doing? How you doing, my friend? It's William from Hawaii. Good to see you. Good to see you. Anthony, hey, what's going on, Anthony? Hope you're doing well today. So, Anthony and I had a couple-hour lesson last night. I hope it was helpful. And Anthony, if you have any questions today at all, please just let me know. All right. So, all right. Well, let's go ahead, run the U.S. legal disclaimer, get that out of the way, and I will be back in about 40 seconds. Thank you.
This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Please carefully read and/or listen to the U.S. government required disclaimer before watching this video or live stream broadcast. The video link and disclaimer text are located in the description section of this video or live broadcast, here and here. Thank you so much.
All right. So yesterday I had an issue with my data stream from my charting software. I could get some of the symbols. I couldn't get all of them. I couldn't get any symbols that were in the New York Stock Exchange, and I thought they were going to be taken care of today. I talked to them again earlier before the show, and they said they're working on it. They said they promised that they'll have it done by Monday. They're hoping to have it done by the end of the day. So what are you going to do? We're just going to have to deal with it again. I actually did bring up from another one of my trading platforms. So I do have a chart here, up-to-date chart, in case we need to use that. But fortunately, you know, looking at the bright side, most of the positions that I have today are mechanical, and therefore I know I don't have to do anything with them. But still, it's a little frustrating. Using a different chart seems weird. It's like driving somebody's weird car, you know, like driving a car in England or something if you're not used to driving on the other side of the road. So anyway, I apologize for this, guys, but really it's kind of out of my control. So let's hope they're up and going on Monday. You know, I've been using these guys for over 20 years, and there's been 2 issues in 20 years. So I think pretty good. But anyway, yeah, it is a little frustrating, but we'll just have to get through it. So first position of the day is DDM. I did buy DDM back here on August 26th. I bought it based upon completely mechanical approach to trading the DDM. Previous day closed under the 200. I bought it here when it closed over the 200. at 45.75. My initial stop would have been a close below the 200, giving me a small stop if I was wrong. If we had a nice move up like we have, then I would just go ahead, keep it, and phase out until I was out of shares. And so you can see this has been a really, really nice trade. These were my three profit targets for today: 51.13, 51.63, 52.13. Did not hit any of these today. Keep in mind this 22 price here, it is not correct because that is yesterday's price action. So today actually we're up 12 cents. So we are up on the day. It's just that we haven't hit any profit targets. So I will continue to stay in this trade, phase out until I run out of shares, or to the downside, because this is a completely mechanical trade, I will get out if we close under the 200 day. So hopefully we don't come all the way back down there, but if we do, I only have about 30% of the shares left. So again, to the upside, I'm going to phase out until I am out of shares, or to the downside, closing under the 200. But you know, that's the main thing with trading here, guys, is enter a position as close as you can to your line in the sand or your stop. If you're wrong small. If you're right, you have the potential for it to have a big run like we've had here. So I've been thankful for this trade. This has been a really nice trade. All right, Google is one of the charts that's working today, thankfully. I did buy Google back here on the 10th of September when we had the 10 SMA cross over the 30 SMA. This is a good back-tested approach. You can test this out. You can see that in the long run, this does have an edge, at least so far. And so that's what I made my buying decision from, was the close, when we had the close of the 10 over the 30 SMA. And you can see it's worked out nicely for us so far. Let me see, 28, 3, 5, 1. All right, I'm out of about 30% of this position already, which is nice. I've locked it in. The market can't take that away from me. I did have 3 profit targets today, have not hit any of these today. It's been an inside bar, so really nothing to do. This is not a mechanical trade. This is the discretionary trade, even though I took it mechanically from the 1030 because it's a stock. I use that as my trigger. I use that as my entry. But after that, now I start trading it discretionarily. Now that it's moved up and it's extended away from my entry. If it would have just stayed in here, I would have waited for the 10 to cross back below the 30 as my initial stop. But if I buy it based upon the crossover, it starts extending up my way. And usually, you know, it has to extend a little bit more than 1 ATR away. It has to get outside of noise. And then I kind of switch to discretionary mode. So with that being said, you know, if we closed below yesterday's low, I probably would go ahead and just lock in profits. But it's an inside bar here, which is an indecisive bar. So really nothing to do here. I'm going to go ahead and just keep this until we have a close below the previous day's low, or I continue to phase up, hit profit targets. You know, there's a few signals up here that are concerning to me. The orange line, this is the previous high back here. So if we move up and reject that line, that would be a red flag for me to lock in profits. The blue line is the 70 RSI. If we hit the 70 RSI, close back below, that would also be a red flag. So this is where I'm targeting right here and right now on Google. The Qs, we do have the Qs working chart-wise. I did buy the Qs back here on September 4th when we had the 5 EMA cross back over the 20 EMA. Again, this is a legitimate, quantified, profitable, long-term backtesting approach to trading the QQQs when you have the 5 EMA crossing over the 20 EMA. This is not a stock, this is an index, so therefore this is a completely mechanical trade for me. Again, you can see it's moved up nicely since we've bought it. We phased out, we phased out, we phased out some yesterday. I'm out of about 30% of this position. Excuse me, about 50% of my position. So mechanical trade, 5 crosses back below the 20, that will be my exit. No profit targets today. The SPY. All right. Well, this is our famous SPY trade that we, this is our famous SPY trade that we talk about every day. This is not based upon technicals whatsoever. This is based upon a long-term back test from Lizanne Saunders at Bespoke Invest. But with this approach, you have 2 options. The first option would be buying the SPY at the open each morning and selling it at the close each day, every day since 1993. So buy at the open, sell at the close, buy at the open, sell at the close. If you would have done that every day from 1993, you would have actually returned a negative 13.9% return. However, if you did the opposite, which is what I do, I buy the SPY at the close every day, sell it the next morning at the open. Buy at the close, sell it next day at the open. Buy at the close, sell it next day at the open. If you would have used this approach since 1993, every day you would have actually returned a positive 634.2% return from 1993. So, what's the disparity between the two? The disparity is all of the prices, all of the gains. Think about this, guys. All of the gains in the S&P since 1993 have come in the after-hour market, people bidding up the price in the after-hour market, bidding it up in the pre-market session, and selling it into the open. That is what accounts for these numbers. So you can see the chart here. The blue line is the buy in the afternoon, sell in the morning. The orange line is the buy in the morning, sell in the afternoon. You can see one method much, much better. This is, we talk about quantified back-tested approaches, not just theories, but real hard numbers. The buy in the afternoon, sell in the morning has done really well over time. The buy in the morning, sell in the afternoon has done very poorly over time. So this is a good quantified backtesting approach. It doesn't mean that it's always going to go up. I mean, here you have a couple years down. Here you have a year down, right? Here you have maybe 9 months to a year down. But as with any trading approach, even if you have an edge, there's going to be just normal ups and downs. It doesn't mean the system is not working. It just means that it's just part of the normal ebb and flow. Just like a casino, some casinos lose sometimes, with some of the big gamblers, they might lose for a week or 2 weeks, whatever. But in the long run, they always make money because the edge plays out. So that's what's important. You have to find an approach that has an edge. Doesn't mean if it doesn't start working immediately that it's not good. You have to have the long-term approach, right? You have to let the edge play out. And the edge, if you have a real edge, it will play out over time, but you have to stay in the game. You have to be able to keep trading and have enough money, keep your money so that that edge can play out. And the only way that you can really do that is position size correctly so you can play the long view. So, all right. So with that being said, S&P is one of the charts that I do not have today, but it was a profitable trade. We bought it here yesterday at 301.21 and we sold it at the open at 301.78. And right now it is lower than that by about $1. So, this played out again where people bid it up into the pre-market, sold in, sold later that day because we're lower. So anyway, 301.29 to 301.78. Not bad. I will take it. We've done very, very well with this approach, and I will be buying this again at the end of the day. All right, SSO. SSO is the double leverage S&P 500. We did buy, that was the profit target we hit yesterday. Okay, we did buy it back here on the 6th of September. Another quantified, back-tested, profitable approach to trading the SSO. When the 10 EMA crosses over the 50 EMA, you can see it is higher than where we bought it. I have phased out a little bit, not a ton. Let's see. Sorry guys. All right, I've phased out of about 25% of this. I bought it here on the crossover, but I did not buy a full position because we were so far above the 1 ATR channel. So I am going to trade this mechanically, but I did buy a half position of this because I did not like where we entered. I would have much rather entered if we would have. I would have used a full position if we would have entered anywhere below the 1 ATR channel down here. But when you get up here, it's pulling the rubber band a little bit tight. So I did want to still take the position, but since it was higher levels, I went ahead and just bought half a position. So it has moved up nicely. No profit targets today yet on SSO, and it's down 47 cents today. So anyway, with this, as long as the 10 EMA stays above the 50 EMA, I'm going to keep this. I'm going to phase out until I'm out of shares, or conversely, the 10 is going to cross back below the 50, and that will be my exit. All right, last one, XLF, also not working today. I did buy this back here on the 28th of August when we had a close below the 200 back, and then the next day we closed above the 200. This again is a good, profitable, back-tested approach to staying in the XLF when it's over the 200, getting out if it closes below the 200. So, you know, we here on the 28th of August, we bought at 26.41 when it closed above the 200. If the next day or in the next coming days it would have closed below the 200, I would have gotten out, most likely taken a small loss. Small losses are fine in trading, but if we were lucky enough for it to go our way, we would stay in it and phase out just like I did. And of course, this has been a huge move. I mean, it's been a huge move today. Doesn't show today's bar, but we did hit one profit target today. And I only have about 8% of my shares left in this. So I'm going to go ahead and just close this out today. I mean, I only have 8% of the shares left. So it just frees up some screens, frees up positions, frees up some work I have to do. I'm happy with the move, but yeah, I'm going to just lock. I do have 8% left, but like I said, I'm just going to free it up. It's not many shares. So I'm just going to take this trade off the table. But from entry to, you know, let's call it exit. Where is it right now? 28.48, right? Yeah, right about there. 7%. Now, I didn't get 7%, right? Because I phased out at lower levels, but still, you know, from bottom to top here, right about 7%. So that's a big trade. So thank you, XLF. I will be exiting the rest of you today and just locking that up and clearing some clutter from my screens. But yeah, great trade. All right. Anthony says, very eye-opening. It really is like seeing things from a different perspective. I learn much more than I would have if I watched your YouTube channel every day. Yeah, it's a little different, huh, Anthony? It's a little different. I mean, it's just communication because we communicated back and forth and so forth. And I threw a few zingers at you. I couldn't get you with one. So that's good, but yeah, I think you're getting the hang of it, Anthony. You did really well last night. Hey, Mount Doji, good to see you, buddy. Hope you're doing well. You have any positions on right now, Mount Doji? Marco, hey, how you doing? Good to see you, Marco. Always like to have Marco here. Marco says, hey, Greg, Steve, and all. Hey, hey, hey. All right, so okay. Let me just check real quick. All right. So listen, everybody, you know, I like to do a few minutes every day on trader psychology. It's the most important part of trading. It's a skill. You have to develop the skill. And so when I see, you know, posts on Twitter about from traders that have good sayings about trader psychology, I think it's helpful for you. So, you know, I want to highlight those, talk a little bit about it. But this is from our good friend Stephen Burns at @SJosephBurns on Twitter. And if you guys don't know who Steve is, you know, he's a famous trader, famous author, great mentor of mine. Just think the world of him. And he's, really helped my trading over the years. And so I would really suggest that you go to his channel at @SJosephBurns on Twitter, follow it, read his information. It is really, really good. But this one's short and sweet. The desire for easy money is your biggest enemy in the stock market. Short and sweet, right? The desire for easy money is your biggest enemy in the stock market. And it is so true, everybody. Listen, the fastest way to lose your money is to try to get rich quick. Think about, from a psychological standpoint, what are you going to do if you try to get rich quick? You're going to take huge risks, right? And if you take huge risk, eventually that risk is going to find you, and you're going to lose a lot of money. So, the desire for easy money is your biggest enemy. Have the mindset of long term. If you have a long-term mindset to trading, I mean, when you say, okay, I'm going to, take a long-term investing approach, it's good advice, right? It's good advice. It has worked out pretty well, but you never hear take the long-term approach to trading. For some reason, I think people think about trading and it's, like a cowboy shootout, and you're going to buy, sell, put on these huge positions, take all this risk. If you have the mindset that you're going to do it quick, you will lose, because you're going to, if you try to get rich quick, you're going to take big risks, and sometimes those risks will pay off, but other times they are not going to pay off, and you will lose your money. And if you lose your money, you won't be trading. If you're not trading, you're not going to get the experience. Without the experience, you're never going to gain the skill. You've heard me say this a million times, right? But it is true. So, if you take anything away from this channel, everybody, please take the long-term approach to trading. Be conservative. Take a small position size. Take good setups that have edges. Keep in mind those edges may not work right away, but they will work in the long run. So that's another reason to take the long-term approach, right? Is so that your edge can play out, so that you don't burn yourself out. So, I hope you look at each trade as just one of the next 1,000 trades. Nice and boring. Go through your process. Win a little, lose a little, win a little, lose a level. Don't get anxious. Don't get your emotions up. But every trade, the next trade of the next 1,000, nice conservative position size, so that it doesn't affect you emotionally, so it doesn't destabilize you. And just take the long-term approach to trading. Take the long-term approach to investing. Everybody understands that. That resonates with people. They know, but not with trading. That's why, I think the average trader busts out in like 9 months or something. Why is that? Because they're trying to get rich quick. They're trying to get easy money. Their positioning size too high, and they don't know how to manage those positions. So anyway, I harp on this all the time, but it's so important, everybody. Just, get rich slow, trade slow. So anyway, thank you, Steve Burns. I appreciate that for posting that. And thanks again for including me in your list today. Steve Burns says, I always enjoy your trading psychology tip of the day. Oh, thanks, buddy. I appreciate it. I think it's important. I think, I don't know if you guys get annoyed with it, but it's important. You need to hear it. I'm just, my goal is if I say it a little bit every day, maybe it'll seep in a little bit until one day you go, oh yeah, that's what I need to do. Right? So, hey Frank, good to see you, Frank. Frank says every dollar matters. I closed the trade today that netted $1.65. Protecting principal is vital. So true, Frank. So true. And that's a sign of trading maturity when you can take a scratch trade. A scratch trade is essentially a break-even trade. It's a real sign of maturity. Most people either have to make a ton or lose a ton until they're happy. I don't know why that is, but probably what that meant with Frank, I don't know 100% sure, but maybe maybe you had a nice run up and it came back. There's nothing worse than having a large gain or a decent gain in a position and then giving it back and letting it turn into a loss. I hate that. And it's, that's a sign of trading immaturity. So congratulations, Frank. $1.65 is better than nothing for sure, right? And here's the other thing too. You know, some traders get in there, trade with 5,000, 10,000, 15,000. And I think somewhere in their mind they think, okay, well, look, I don't want to lose this. But if I did, it's not the end of the world. Maybe I can make it back and regroup and this and that. But with that kind of mindset, they're going to take bigger risk. If you're trading a huge account, then you're probably really going to be careful because you really can't lose that. But I've noticed that people with smaller accounts tend to take bigger losses and bigger risks because they feel like, well, if I lose it, I can make this back. It's not the end of the world. But whether you're trading with $1,000 or $1 million, respect the money, respect the process, regardless of how much money you're using. And by the way, if you are trading with a simulation account, usually they put like $100,000 in there. If you're trading with a simulation account, great, that's fine. Have fun with it. It's good practice. But when you start trading live, if you're trading with $10,000, don't do your simulation trade with 100,000. It's going to skew your perception of dollars. If you're really going to end up trading with $10,000, put $10,000 in your simulation account so it's apples to apples. All right. So, all right. This is going to be a little janky today because of the chart situation. So, what I'm going to do is I'm going to go through each stock here. If something looked like it could potentially be good, then I will go ahead and we'll look at it over here on the chart that's working. If it doesn't look good big picture on my regular charts, we won't do that. So let's do that, okay? So I'm going to do this kind of quick. Apple. So Apple is down today. Nothing there. This is real time. My friend's call looks like he's doing great. He had tons of calls that he sold up here at 225. So he is good. This is going to expire at the end of the day. So now he's happy. But nothing, nothing on Apple. You know, on Apple right now, what we're looking for is we're looking, Anthony, we talked about this last night, but we're looking now for a return to value kind of trade, right? We made a higher high. We're looking to come back into the value zone. We're looking to move sideways for a couple days, look for a V1, V2 trigger. So that is what I'm looking for at this point, is a return to value, return back in the value, move sideways, have a V1 or V2, but nothing there today. By the way, Apple did reject the 70 RSI yesterday. Went up, went up, went up, got above the 70, couldn't hold it, closed below, and, you know, that is a good exit point, and you can see clearly it was a good exit point based upon that yesterday. Adobe is working here on the chart, but there's really nothing here. Earnings are coming up, so nothing there. AGQ, this chart is not working. This is yesterday's data. We are looking for a V1 or V2. I mean, this is a return to value trade. We've moved up, we've moved back into the value zone. Let's quickly take a look at this on a chart that works. And it's a big down day, huge down day today. So nothing on AGQ today whatsoever. You know, though, it looks like the 5 is closing below the 20. So now we can wait for another 520 EMA crossover for an entry. So that's good. That's good, right? So nothing there today, but for next week, we can kind of start looking for that. Advanced micro devices, really nothing with advanced micro devices here, big picture. So I'm not going to look on the other chart. Amazon, this is working today. It's down $5.90. Really nothing there. What am I looking for? What kind of trade am I looking for on this? We made a higher high than the previous high. I'm looking for a pullback into value. Look for a V1, pullback into value, sidewards movement, consolidation, look for a V1 or a V2. Conversely, if it moves down and doesn't hold, I would look for a close under the 200, back over the 200, or a close under the 250, back over the 250. These both back test well. I did buy Amazon back here on that exact same approach. Previous day we closed under the 200, then we closed above the 200. That was my entry. My initial stop was a close below the 200. We went down underneath intraday a couple times but didn't close there, so I kept it, and this was a really nice trade. I stayed in all the way, and I exited right here. Boeing. Let's take a look at Boeing on a chart that works. Kind of moving sidewards here. So what's our RSI? 6480. Yeah. So there's nothing on Boeing today. Alibaba doesn't look like there's anything there whatsoever. Caterpillar. It's just too high up here. It's nothing I would be interested in. DBC, we did make a higher high, it came back into value, so this, could possibly be a return to value trade. Let's quickly look at DBC. Again, guys, I apologize for this with the charts, but what can I do, right? Yeah, nothing there. DDM we have. From back here, we have not hit any profit targets today. Mechanical approach. Walt Disney. So let's take a look real quick on the Walt Disney chart, see if anything's happening. No, nothing really is happening on Walt Disney. I did buy Walt Disney right here. Unfortunately, when the 10 crossed over the 50, which is a good back-tested approach on Disney, but the next day immediately went down. Doesn't happen a lot when you have these crossovers, but it did here. Fortunately, I took a half a position because it happened outside the 1 ATR channel. So look on the bright side. Whenever you have a loss, try to find something good in there so you don't beat yourself up. But I did have to get out here and immediately went back up, but that's okay. So nothing on Walt Disney. Etsy's insane. Etsy is literally insane. Here we went under the 30, back over the 30, and I didn't buy it here. I just didn't buy it. Obviously, I wish I would have. I would have stayed in the whole way. There was nothing in this movement to get me out of the chart. But that happens sometimes. Sometimes certain stocks just have your number. And I didn't buy this because it gapped. It was right underneath the 1 ATR channel. I thought this was going to act as resistance. So I did not take the trade. I guess in hindsight, I should have taken the trade, but it has just moved straight up since then. If you miss a trade like this and it keeps moving, be patient, wait again for a valid signal. Don't get frustrated and try to chase it, right? So that's the best advice I can give you there. Ford Motor Company, let's take a look at that. Nothing there. Facebook, just moving up here, moving sidewards. I would be interested in Facebook if we got a 1050 SMA cross, but that's a long way off. So nothing on Facebook today. 5 below is just too high. Yesterday we went above the 3rd ATR channel, back under the 3rd ATR channel, which is somewhat bearish. I don't know what it's doing today. Let's take a look. And it is down. So yeah, so that's not positive when you close back under, but nothing on that. Gold. We had that big gap up and reversal today. The 5 EMA is under the 20 EMA, so I will be interested in going long gold if we get another 5 crossing back over the 20 EMA. And let's take a look at gold today. Yeah, it's down. Yep, it's down. This was the previous resistance up here, and we finally broke above it. So, I would imagine that we should have some type of we should have some types of support there if we get down to that level. Google, I do have. We talked about that. I bought that with the 1030 SMA cross right here. Is up today. It's good. Has not hit a profit target, but glad it's up, obviously. Goldman Sachs, Steve had a great trade on Goldman Sachs with the 520 EMA cross. I believe he exited yesterday. I'm not sure what it's doing today. Let's take a gander. Up a little bit, up 89 cents. But nothing, no new entry there today. IBB, you know, on IBB, I am waiting for a 530 EMA cross. And 130.80. Oh, well, that cross looks like it's valid right now. I didn't notice that earlier. So this will be potential entry here for the end of the day. So let's take a look here. Happening in the value zone, I can take a full position. All right. All right. So that's what I was waiting for. I was waiting for that 530 cross. Right now the 5 is 103.82. 30 is 103.81. So the cross looks valid. So that will definitely be a possibility. All right, I think I'm going to run out of time. So let's remind each other to get back to IBB at the end of the day, okay? Intel is just too high. I know I can't do anything there. Russell 2000 is just too high. There's nothing new. There's nothing going to be anything there for me. Johnson & Johnson, nothing. Coca-Cola did come into the value zone looking for a return to value kind of trade, but you see how we did go make a higher high, we did come back into the value zone, but we had no sidewards movement. So we did have a V2. Here's day 1, day 2, day 3. Day 2 washes out day 1, day 3 closes above day 1, but I don't like the slope of this line. I need to see it move sideways. And you know, what's the importance of that? It shows that their selling is drying out, that there's some kind of support. When it happens like this, and then goes right back up, it's more of a V, just a regular V, and there's still sellers up here, or people that'll be happy to sell once it got back up here. So nothing on Coca-Cola. I mean, everything looked good, higher high. It did move into the value zone, 2 or 3, but we didn't get any sidewards movement. Lockheed Martin, nothing there. MasterCard, you know, we had that huge move down. We are back into value. Let's take a quick look at MasterCard. Today and see what's going on. Up 3 cents, so nothing there, but it is starting to, you know, we wanted to see it come back in the value zone, start to move sidewards. Well, you know, now it is kind of starting a little bit of some consolidation. So with that being said, you know, if we do get some kind of V1 or V2 in the coming days, this would be probably a decent spot. Altria, nothing on Altria to even look at. Merck, there's not going to be anything there at either. Microsoft, you know, it did gap above all the moving averages yesterday. Let's take a look, see what MasterCard's Microsoft's doing today. Microsoft is down, so it's just range bound right now. There's really nothing going on with Microsoft. Netflix. Netflix has been another one of those ones that I have been battling. I did buy here, did move up here, and then had the big plunge down here. So I did end up taking a loss on this. It was a half position. I did scale out about 25% up in here. So that's positive, but then it went right back down. Now it's going right back up. You know, the last time it closed above the 10-day was here. I just really can't bring myself to buy this. Look, we're at a 44.53 RSI. We're probably going to have some inherent resistance up here. at the 50 RSI, the invisible resistance above it. So nothing there. What I'd like to see here is I'd like to see move up a little bit more, have a higher low V1, V2 within the channel, within the 1 and the -1 ATR channel. That might be another place, but at right here, right this second, it feels chasey. Nike had that really strong move back up. I think rejected the 70 RSI, so nothing on me for Nike today. Philip Morris, we had that huge plunge, sidewards move. We're moving up a little bit today. Down pretty substantially today. Down, let's see. Philip Morris. Yeah, what are we on? RSI wise, we're at 37.36. So I might be interested in Philip Morris if we can go under the 30, back over the 30, but still have to be patient. It would have to come back down maybe into about this kind of area. So nothing on Philip Morris today. PayPal did have the rejection of the 200, and Anthony, if you're listening, we didn't close below the 200 and back over the 200, but we did go under the 200, back over the 200 intraday. So, that's still valid. So, somebody could have bought here just because it had a small risk if they were wrong, and they had some good upside potential if they were right. So, Anthony, this is a good example of not closing under and back over, but rejecting it intraday and then closing back above. But nothing on PayPal. Qs we have with the 520 crossover, we've been scaling out. No profit targets today. I'll stay in this as long as the 5's above the 20. Snap, I could just tell by this there's nothing really interesting. In order for me to get interested at Snap at this point, I'd have to have some kind of crossover like the 520. I'm not sure how that back tests. I'd have to check that first. Or, looking for a dip down to the 30 RSI. SPY, we had that slight profitable overnight trade, buying in the yesterday's afternoon, selling today at the close, or selling this morning at the close. Buying yesterday at the close, selling this morning at the open. All right, and I will be buying this again today at the close. All right, so Square. Square looks fairly decent to me. And the reason why is we had this low, we had a rally, we came back down, we made a lower low. Even though we're lower now than this previous low, we don't have any red bars. That is what's called a double bottom with a bullish divergence. It shows waning momentum on this second leg down. I've been waiting for a trigger. I like the setup. I like the context of the chart. Yesterday, we were at 29.94 RSI. If it would have closed above the 30, I would have considered buying it, but it did not. Today, however, good thing I had this chart. Today, however, the RSI is back at 31.53. So on the big chart, I like the context. I like the double bottom. I like the double bottom with the bullish divergence, but we didn't have the trigger. On the working chart, you can see what happened today. Yesterday was under 30. We went way under 30 earlier today, and now we are above 30. In addition to that, we have a V1. Here is day 1. Day 2 washes out day 1, and it looks like it's going to close above day 1's close. That's why I drew the blue line. In addition, intraday, this is yesterday's bar, but today's bar, we did test the third ATR channel as well. So a bunch of things going on here. Today we tested the third ATR channel. We went way under the 30. Currently, right now, we've closed back over the 30 RSI while testing the third ATR, and we triggered a V1 entry, as you can see. So nice V1 entry, under 30, back over 30, also tested the third ATR channel, and at the same time, we have big movement down on this move down. The momentum has really waned on this second leg down, even though we're lower than the first. So this is a a double bottom with a bullish divergence, rejection of the 30, rejection of the third ATR channel, and a V1. So, you know, a lot of signals there. So I am going to be buying this today at the end of the day. This is this is under the 200-day, so I will be taking a half position. But I will be buying this today. All right, we have 10 minutes. All right, so SSO, we did buy this with the 1050 EMA cross back here on the 6th. Has moved up nicely. We did not hit a profit target today yet. TLT continuing to go down. You know, we talked about this yesterday, but you know, if we look at this on the weekly chart, here was the previous high. This acted as resistance. We broke through it. This should now has the possibility of acting as support somewhere in this range right here. On the weekly, it would put us into the value zone between the 1 and the -1 ATR channel. On the daily, that 30 RSI is right about here, and that's lining up with the 100-day moving average. And that is, you know, I discussed this with Anthony last night, but you know, that is a really good setup when you have a convergence of the 30 RSI or the very low 30 RSI at the same time that the price is at, near, or under and back above the 100-day moving average. And in addition, we have the possibility of this previous high back here acting as support. So the way I look at that, there would be three groups of buyers in this kind of area. It's not there yet. Buyers are not pulling the trigger yet because they want it to come down here, right? I'm not buying here. That means there's a lot of other people not buying here. But next week, I will certainly be interested. Possibility in going long TLT. Tesla, you know, just too high. This kind of trade again, when you make these highs, we're looking for a return to value trade, return back into the value zone. Twitter, okay, so no feed on this one. Let's take a look at Twitter. See what's happening with Twitter today. So it's down about 53 cents. So, you know, we are, you know, this is a return to value trade. We made a higher high. So now I'm looking for this to come back down into the value zone, move sideways, look for a V1, V2 to trigger me back to the long side. Conversely, you know, if we came back down here, see the convergence of the 100-day moving average and the third ATR channel, this would probably line up close with the 30 RSI. This would be a really great spot right down here if we got down here. I don't know if it's going to go there. So the two options here are move sideways in the value zone, get a V1, V2 for an entry, or if it's a deep dip, have a confluence here of the third ATR channel, the 100-day moving average, and the 30 RSI. That would be a really, really good spot right there. UNG, same as everything else. We're way above. We'd look for a return to value trade back here in the value zone. UNH, let's take a look at that quickly. Nope. Nothing there today. Oil, this is yesterday's, but nothing on oil. Dollar, nothing on the dollar. VIX, what are we at? 39 RSI, but that was yesterday. So let's look at the VIX today, see what's happening. Currently, we are at a 38.34 RSI. I would like to see VIX get down to the 30 RSI, back down at this previous low where it held support. I think that might be, you know, a place for me to dip my toe back up into the VIX. We did buy VIX right back here. Don't know this date right now on this chart, but this was one of our best trades of the year. Had that V2, day 1, day 2, day 3, day 2, washed out day 1, closed above day 1. In addition, we went under 30, back over 30. And those are the kind of trades that I like, and boy, did it move. So nothing yet on VIX today, but possibly for next week. Verizon is just too high. Walmart, too high, looking for a return to value. Energy, nothing there. I did go ahead and just get out of XLF today. I only had 8% of my position left. Let's look on a real chart, see what that looks like. So, yeah, so I'm going to enter. I'm going to exit here at the end of the day. It's up against the previous high. We had a monster trade on this, just a one-way ticket, which was really great. But I am going to go ahead and just exit this today. Real estate back into value. Let me look at that real quick. Another day down on XLE, so nothing there. Utilities, nothing there. Healthcare, nothing there. XPH, nothing there. So I am going to buy Square today. As long as it closes above the 30 RSI, and right now it is at a 32.13. Looks good. V1, legitimate V1 under 30, over 30, and also tag the third ATR channel below right here. So I definitely will be buying this at the end of the day. And the other one was IBB, as long as we have the 530 crossover. Right now the 5 is 103.79. Oh, and the 30 is now 103.80. So it is now under, everybody. It does not look like it's going to be the close. So the 5 is 103.79. The 30 is 103.80. The way ETF replay does this, if they close at the same level, they consider that a cross. Okay, I'll tell you what I'm gonna do. What do we have? 3 minutes. All right.
Order partially filled.
I'm gonna go ahead and buy Square right now. Get that out of the way.
Order partially filled.
58.32.
Order filled.
All right. Now this isn't showing today's 58.32. All right, this isn't showing today's bar, but I did get filled. I did get filled at 58.32. And if we look back over here, it's at 58.30. Okay, so that's the entry, 58.32 with the V1 under 30, over the 30. Tag the third ATR channel, back over the third ATR channel. You know, my my profit target, initial profit target on Square is going to be the $50 RSI, probably right up into this range. If I'm wrong, hopefully I'll be wrong small with a close below the 30 RSI on the other chart. Sorry, this is complicated with the two charts. I apologize if this is confusing you. It's confusing me. Okay, so I've got that taken care of. Only thing we have to look at right now is the, oh gosh. All right. Okay. So the 5 is 10. Okay, now they're even. Oh, shoot. How much time do I have? Oh, this is going to be a tough one. They have to be even for it to work. 79.80, 79.80.
Order cancelled. Order filled.
I did not buy it. I did not buy it. And good thing I didn't, because the 103.73, the 5 is below the 103.79. So I did not buy it. Thank goodness. All right. And we did buy SPY at 301.09. So the new entry for SPY. $301.09. And it closed at 301. Oh. Wait, is that right? Bought 301.09. And now it's at 301.10. All right, fine. Fine. All right, so all right, it was a profitable day, thankfully, even with all this mess with the charts, and another yearly high today as well. So I am definitely thankful for that. So, all right, I apologize about this mess with the charts, everybody, but hopefully Trade Navigator will have this worked out by Monday. I hope so. So listen, if anybody has any questions about anything I did today, please just let me know. If you have any questions about anything else, please let me know. I'm happy to answer it. But before I get to that, I hope you don't mind, but I just need to do my quick little end of day plug and just let everybody know that I do offer private one-on-one coaching, teaching, and mentoring lessons in the evening time via Skype. I really enjoy teaching. I have really good success with my clients. What I do here, I hope is helpful, but as Anthony said earlier, the one-on-ones, you do, learn more. There's more interaction. So, if you've been thinking about it, reach out to me on Twitter, or my email is in the description of this video. And generally, it just starts with a 30, 40-minute Skype call. It's free. I just want to get to know you a little bit more. I want to understand, how you're trading, what your experience is, what your challenges are, what your goals are. And then if we decide to work together, I'll put together a lesson plan that helps you hopefully achieve those goals. And, one thing is that we always talk about sticking to your plan. Yeah, you have to stick to your plan. But, what I've realized with a lot of my clients, they don't really know what a plan is, right? They really don't know what a plan is. So, the one-on-one lessons, I do really help you develop a plan, money management plan, correlation plan, all this kind of stuff. So, actually, I think it's one of the most valid reasons to have the lessons with me. But so I have a 10-hour course. It's 5 2-hour live one-on-one sessions with me on Skype. So if you're interested, you want to set up just that initial kind of get to know you call, please just reach out to me and let me know. And then if you enjoy this channel, I would really appreciate it if you would subscribe to it if you haven't already. Or if you could hit the thumbs up button, I would really appreciate that as well. It helps, promote the channel out to more people. And Lord knows there's a lot of people out there that need help with trading. And I do get a lot of emails from people saying, thank you for the channel. It is really helping me, making a difference. So I want to get it out to as many people as possible, and hitting the thumbs up button is one of the ways to do that. So, all right, so that's my plug. Enough of that. So let's see if anybody has any comments today. All right. Mount Doji says, Disney Weekly looked decent too. Well, let's take a look at Disney. Yeah, I'm glad you mentioned that, Mount Doji, in reference to Anthony. But, we talked about daily charts last night. But on the weekly, look, we're looking for a return to value, right? We have gone above the 1 ATR channel, back in, moving sidewards, looking good. This wasn't the best of V2s, but it was okay. So technically it's fine. But yeah, it is. It is actually, Mount Doji, because we've gone down a little bit, now we have a lower high. Ideally, I'd like to see the prices wash out this previous low on this week to get a reset for a V1, V2. Remember we talked about that before? Oh, Mount Doji, how dare you? Wait, I meant the XLE weekly. How dare you? Listen, the Disney weekly's not bad. I gotta say, it's not bad. You know, we went higher, we came into value. Now we've made a lower high though, and once you have a lower high, then I like to have that previous low washed out before we go higher. But let's look at XLE. Yeah, I actually like Disney better, and the reason why is because I mean, obviously we have had a decent move here. You know, here was the previous low. We went down here. Now we've closed back up into the old range. That's good. But now this is looking a little chasey to me, right? I mean, it's a 47.59 RSI. Where did we get to with the high of the week? About 50.60. So we tested the 50 RSI and rejected it. That's not good, right? What I'd like to see now, the people that bought down here probably sold here because of that reason. Just like if it was the daily and we bought here and it rejected the 50, we would sell. So people bought here, sold here. I'd like to see a couple bars down. Look for a V1, you know, look for a V1, V2, ideally under the 1 ATR channel back over that, you know, that's what I would be looking for. But thank you for pointing that out, Mount Doji. But just here and now, it looks a little chasey to me. I would not be chasing this, but I mean, you know, it looks good as far as the way it's going, the directions it's going. But I simply would just look for a pullback in a V1, V2 because the people that bought here most likely got out here. That's going to cause some selling pressure. That may cause it to go back down, test the 1 ATR channel. But then if we could get a nice V1 or V2, then the people that bought here sold here. You have a whole group of sellers out of the equation, and that may allow you to have some easier movement. So thanks for pointing that out, Mount Doji. I definitely will be watching that next week as well. Now, Doji, please share your thoughts on Snap when you can. I like the daily and weekly view, but I know it's coming from lower highs. All right, first of all, let me take a look and see what it did today. All right, so it was up slightly today. So it's up here about today. On the daily, look, we had this huge, big skyscraper bar down. You know that I don't like those. And you know that when you have a big down move like this, you're probably going to find some kind of resistance at the 50% point of this bar on the way up. So, you know, I would say it's at about the 55 level. That's pretty good. Looks like it is closing above the 50-day moving average. That is also good. The RSI is 51.72. That is also good, but I don't like that we still have this big monster skyscraper waterfall canyon candle in our recent past. We made a lower low here. Same thing with Snapchat, Mount Doji. I'd like, you know, the people that bought it here, they're going to start. It did get to the 50 RSI today, or yesterday at least, and reject. I'd like to see this come down for a couple days. Again, retest the negative 1 ATR channel with the V1, V2. That's what I would do. But let's look at the weekly. Yeah, so the weekly, you know, looking at it from a, you know, sky view picture, from a bigger view picture here, we've had a nice move up. Coming into the value zone is not unexpected. That's healthy, right? I mean, anytime we have up, we usually return to value, maybe hang out for a while before we go up above value. So I agree with you, Mount Doji. I think it's starting to look good. I'd like to see it come down a little bit more, both on the weekly, a little bit deeper into the value zone, and on the daily, retrace a little bit of this gain and get some of those sellers, that wash some of those sellers out of there. Hey Murat, how you doing, my friend? Good to see you. That's our friend Murat from Norway. Thank you for coming by as always. Workhorse, hey buddy, what's going on? Good to see you again. Thanks for stopping by and saying hi. Have a great weekend. You too, Workhorse. Hope everything's going well with your business. Anthony, I need to take off. Great weekend. I'll see you Monday. Great. Sounds good, Anthony. Thank you. You did a great job last night. Haroon, how are you? Thank you for coming by and saying hi. Hi, I bought ZM at 92. Should I sell it or just cut a big loss? Ooh. At 92. So you bought it up here approximately. It looks like you bought it before earnings. Boy, this is a tough one. It's a 3230 RSI at the moment. So these are my thoughts, Haroon. I don't want to tell you what to do with your approach. I'm just going to tell you, if it were me, what I would do. Okay. I would counsel you, though, to, in the future, not get involved with the stock before earnings. And I don't know, maybe you did buy it before earnings. Maybe you just bought it here after earnings. I don't know. But either way, it's just a good policy. I mean, if you bought it after earnings, fine, right? But just as going forward, as a good policy is not to get involved or hold stocks through earnings, because these things can happen. If this were me right now, this second, we are at a 3230 RSI. If it were me, I would probably hold on to this until it closed under a 30 RSI. If it closed under 30 RSI, I would just take my lumps, get out of it. If it stays above, I probably hold it till it stays above. That's probably all I would do. I mean, I know it's tough to get out of you after you've had such a big loss like this, but if it were me currently right now, as is, we're to, let's see. That is today, right? 78.85. No, that's not showing. Oh, that's today. That's today. Okay, fine. Yeah. All right. This is one of the charts that's working. Yeah. I mean, look, we're close to the third ATR channel. It did reject these areas down here. So, yeah, I would probably hold on to this unless it lost the 30 RSI. That's what I would do if it were me. If it loses 30 RSI, I would get out. If you wanted to get back in, I'd wait for it to close above the 30. But sorry you got beat up on that, Haroon. That's always tough. But that's what I would do. A close under 30, I would get out. I'd probably hold it above 30. Murat says, I think Zynga had a good day. I like stocks starting negative and finishing positive. Negative in the first 2 hours and positive in the last 2 hours of the session is a good sign. It's a very good sign. Murat, in bear markets, generally you open higher and close lower. In bull markets, you generally open lower and close higher. And, again, that comes back to end of day trading. What are the professionals doing at the end of the day? Where are they moving it? Are they selling it off in the afternoon, or are they buying it in the afternoon? So let's look at Zynga. Okay, so it was up 4 cents today. Was down much lower earlier, but it had a great come from behind. Nice V1, right? Yesterday's low. Today we washed it out thoroughly and closed above day one's close. What do we do in RSI wise? 54.56. Yeah, looks pretty good. Nice volume too. That actually looks pretty good. Let me look at it on the this one is working. Yeah, that's good. I mean, big washout, Closed above the 1 ATR channel, V1, MACD's positive. Looks pretty sweet and great recovery. Murat says, buy this way is easier. It is easier to accumulate the shares without putting the price up too much. Okay. William says, hi, Greg. Thoughts of Verizon's as short position. The risk is very minimal. All right. Yeah, I mean, I agree with you. We're up there in pretty rarefied rare. It's just I guess I would say, William, you make sure that you have a plan. You know, if you short here, really make sure you have a plan. What's your stop going to be to the upside? What's your profit target's going to be to the downside? I mean, me personally, if this were me, I'm not telling you what to do, but if this were me personally, I would wait for either one of three things to happen if you really want to short this. A close under the previous day's low. Well, actually, let me look at this chart on here so I can actually see something. Okay, well, that's what I was just going to say. A close below the previous day's low. So 55.96. So it closed at, wait a minute, 59.96. That makes way more sense. Right about there. Before I saw what it did today, I was going to say a close below at least yesterday's low, close back under the third ATR channel, which it did today. And let's see what the RSI was. Did it close under 70? 66.97. Those are the three things that I said that I would be looking for to short. Yeah, I mean, I don't short a lot, but those are the signals. Above 70, under 70. Above the third HER channel, under the third HER channel. And a close below the previous day's low. But, you know, what you should really look for here is, you know, if you did short today at the end of the day, what is going to be your, what is going to be your potential profit target? I would imagine, you know, somewhere, let's take a look. Somewhere in here would be my profit target because, you know, it probably should hold some support here at this previous resistance. Now it's support. You're probably going to have some support here at the upward sloping 1 ATR channel. And that would put us at what kind of RSI level down there? 54. Yeah. So if it were me and I was going to short, this type of area here would be my, this area down in here would be kind of my profit target area. And my stop would be a close back above the 70. And right now you're at 70 RSI. Right now you're to 66.96, almost 67. So that's what I would do. Close back over 70 RSI would be my stop. Somewhere down here in the 58.42 level, this previous resistance, which is now support level, lines up with these other things in the low 50 RSI. That's how I would view this, William. Haroon says, thank you so much. Yeah, man, I'm sorry to see that you have that loss on that trade, bud. But, you know, in the future, it's generally pretty good not to buy right before earnings. And I don't know if you did. Maybe you bought after earnings. I don't know. But just, you know, just something I wanted to, you know, tell you to think about in the future. All right. I really hope my charts are up Monday. This has been difficult and stressful. So we'll see what happens. Hey, Larry, what's going on? Larry says, hello, how is the RSI factored in your decision on position sizing? Is it the length of time under the 30 or how far it goes below the 30? No, and RSI doesn't factor into my position sizing. What factors into my position sizing, Larry, is whether or not the price is under the 200-day or not, the 200-day moving average. It's not whether it's under the 30 or back over the 30. But let's see, how is the RSI factoring today? Is it the length of time under the 30 or how far it goes below the 30? No, I use the 30 RSI as a level. It has nothing to do with position size. But generally there's buyers that come in at the 30 RSI. Just like there's buyers that come in at the 200-day moving average, there's buyers lurking there. There's generally buyers lurking at where the 30 RSI is going to be. If they buy it and it closes under 30, that's their line in the sand. And that's why I don't like to hold on to stocks that can't hold the 30 RSI. If it closes back above the 30, then people are going to hold it. Just like I was telling Haroon on Zoom, it's holding above the 30 RSI. So buyers came in at that level. But if the price goes under 30 RSI, those buyers are going to get out. Just like me, if I buy something, I'll hold it over 30, but if it closes under 30, I'll just get out. And a lot of other people are going to do that as well. So it's not the length of time under the 30 or anything like that. It's just, I don't want to hold a position under 30, but I will hold it above 30 because there are buyers, there should be support of 30. I hope that helps, Larry. Is that what you're asking? If that didn't do it, just rephrase. William says, those were my thoughts on this setup. Thanks for confirming them. Yeah, that's exactly what I was looking for, William. I was looking for, close back under the 70, under the previous day's low, under the third ATR channel. And, looking at it here, I didn't know what it did today because of the charts. But then as soon as I switch over, boom, it's done it all. So yeah, I think it gives a good risk to reward setup for sure. Really good one, actually. Larry says, gotcha, thanks. You're certainly welcome. William, did you short Verizon? Be interested in watching that if you did. All right. So the only trade I made today, I made two. I bought the SPY 30109, and then I did buy Square at 58.30. And right now it's 58.20 after hours. So again, this, we were just talking about the 30 RSIs. If we look at the RSI on Square, it's at a 32.19. I'll hold this. I'll target the 50 RSI to the upside. But with the any close under 30, I'm out. That's all there is to it. All right, everybody, last chance for questions. Otherwise, I'm going to get out of here, go for a hike. It was a really nice week, good profitable week. I'm always grateful for that. Grateful that we made a new high today for the year. Also, very grateful for that as well. So, William, yes, I took a small position as a counter trend trade, looking to get back into the first ATR channel at 50 RSI. Perfect. Yeah, just what we talked about. Good analysis, William. How's Cooper doing? My little golden doodle is gone now, Hawaii bound, so I missed that little dog. That was a fun little puppy to have for 2.5 months. All right. So William, thank you for coming by. Appreciate you participating. Nice to see you. Hey, what's Larry doing? Always good to see you. I hope that helped with your questions, Larry. Haroon, sorry about that Zoom trade, but I hope that helps. If you have any other questions or if I can help you, feel free to reach out, email me. Or Twitter me. Murat, good seeing you, my friend. Hope everything's going well in Norway this evening. Thank you for coming by and for participating in your great comments that you make each day. Those are great. Anthony, great seeing you here today. We will talk to you on Monday. Workhorse, hope everything's going well down in, I think it's Texas, and hope your business is working well and going well. So if you have any questions I can help with, please let me know. Mount Doji, good seeing you, my friend. Nice to have you here. Always have great questions. Frank always has great questions as well. Thank you for coming, Frank. Marco, great seeing you. Hope you keep coming back. And Steve Burns, thank you. Appreciate you being here. Honor as always. Hope you and Holly and the dogs and everyone's doing well. And congratulations on your great trading that you had this week. And I think Gamer Squad. Didn't want to get out of here without saying hi, goodbye to Gamer Squad. So thanks for coming, Gamer Squad. Hope you're doing well. I hope everybody has a good weekend. I hope you go out and do something nice for somebody today and every day. And if you have any questions that you couldn't think of today, feel free. You can email them to me. I'm happy to answer them and try to help you guys out. All right. So enjoy the rest of your day. Have a safe weekend. And we will talk to you on Monday. And hopefully my charts will be back up and running. I really hope. Okay. Take care, everybody. We'll see you later. Bye-bye.
U.S. government required disclaimer. Stock, options, futures, and forex trading is not appropriate for everyone. While there is a potential for large rewards, there is also a substantial risk of loss associated with trading. The material in this video or live broadcast is not geared towards any particular individual or to any particular financial situation and is not intended to meet the particular investment objectives of any viewer. This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Any and all information contained in, implied, or referenced by this video or live broadcast is not to be construed as investment advice, and no representation is made that any individual or entity involved in production of this video or live broadcast is an investment or financial advisor or is registered or authorized to give any financial advice. We are publishers and educators only. Therefore, the various producers of this video or live broadcast will not accept liability for any loss or damage of any kind which may arise either directly or indirectly out of the use of any of this material, including any loss of profit. No representation is made that any account or investment will or is likely to achieve the profit or losses demonstrated. We recommend consultation with a licensed and qualified professional before making any investment decision. This video or live broadcast is not to be construed as an offer to buy or sell any security, financial instrument, or financial product of any kind. Notice is hereby given that any individual or entity involved in production of this video or live broadcast or their clients may have an interest in any security, financial instrument, or financial product mentioned or referenced. Any simulated or hypothetical performance result depicted does not represent actual trading and therefore may under or overcompensate for the impact of various market factors such as lack of liquidity. Thank you.